Hello everybody, my name is Nicole and I'm a technical analyst and private investor. And today I wanted to look at markets that, quite frankly, are in total chaos, disarray left, right and centre. I know we're all fighting this virus, we've got unprecedented yada 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 situation, but be very, very careful with financial markets too, because they are not safe havens and they are not something to be played around with. And I'm suspecting that some of them are unsuitable as investment vehicles. Full stop, end of story. My first chart is the collapse in the price of crude oil. There is a specific problem with West Texas Intermediate in the States, which actually traded at negative price. Now, why people are surprised that it traded at negative, we've had negative key interest rates, benchmark rates, set by central banks for months and months and months. My chart is actually of Brent Crude because that's a little bit more organized and stable. But as you can see on this very long-term quarterly chart, the price action since January this year has been some of the worst ever, comparable to what we had after this commodity speculative boom bust in 2008, 2009. And we are down to levels that we have seen before. Okay, so let's not talk about uncharted territory. We have been here before at previous times of economic instability or stress or recession and so on. But my point here is that from starting the year at $70 a barrel, we hit 16 this week. Now that's a 77% collapse in the value of crude oil in Europe. I mean, this is just grim. I mean, it's grimmer and grimmer, and it's going to affect the price of all shares, industries associated with carbon. To my second chart, this is a slightly different one. It's the Dow Jones Industrial Average, and it's a daily chart this year. The weekly, I beg your pardon, weekly. And as you can see, it too has had a sudden and rather catastrophic loss from a record high. The 50 and 200-day moving averages have crossed as they were both turning down, and it's called a death cross. That's negative. We've bounced, yes, we've bounced. Most industries have recovered between a Fibonacci 38% and the 50% level. This one is at the 50% level, and it's struggling against the 50-day descending moving average. I suggest that it's going to fizzle out. This bounce is going to fizzle out, and we're going to turn down, hopefully, a lot more slowly, though, because, again, this is catastrophic losses for the investor so far since January. And my third and final chart is one that you may not know so well. It's what the Americans called TIPS paper. That's Treasury Inflation Protected Securities. Anyway, this is a relatively new one in the States. The one I've chosen is carries a coupon of 75 basis points, and it expires in February 2042. 2042 it expires. So this should be a very valuable, solid investment, because should inflation pick up, well, you've got that. And as we know, the Fed's balance sheet is at $6.5 trillion and expanding it exponentially. They're shoveling out treasury bills at a rate, but the market is completely dysfunctional there too. All the off-the-run paper, people are struggling to get two-way prices to get in and out as they please. And this is one you can see that from a high of $135 per 100 nominal, it suddenly slumped in March to a mere 95. You know, for a US Treasury paper to lose 33% of its value, well, this is just dreadful, absolutely dreadful. Now it's sort of stabilized again and coming back to something a bit more normal. But I worry that because of the liquidity issues, and we've seen this not only in the Treasury paper, but also in certain commodity futures as well, where even the CFTC has waived certain regulations. I mean, it's just falling apart. So please be very, very careful indeed and try to do as little as possible. Good luck and good trading.